It is holiday shopping season. I think it's really hard to be a retail analyst. You got to be right on the stock and valuation and earnings and all that kind of stuff, like every other analyst. But then you also have to kind of be right on fashion. What's
I know,
going
and
to
how
sell?
do you do that?
How do you do that? I have no idea. Mary Ross Gilbert, that's her job. Bloomberg Intelligence senior equity analyst covering the retailers. Mary, talk to us about apparel and where are we in the world of apparel these days? What's selling? What's not selling? Are some companies getting it right? Because we're right smack in the middle of the holiday shopping season.
Yes, so Paul, you're absolutely right. Here we are in the holiday season, and yes, there are some companies that are getting it right. One of those companies includes Gap, which they'll be reporting their earnings on Thursday. And we see a lot of strength with their two largest brands being Old Navy. So we're seeing, tremendous strength in style, their viral campaigns that they have there, and also with their namesake brand Gap, which is their second largest brand for that company. So that's like 70% of sales right there for those two brands. And we're seeing a lot of strength and momentum, and we think that continues into 2026 for Gap. Aritzia, which is expanding in the U.S. and is entering new markets, opening new stores, and then they're gaining on a comp sales basis. So we're seeing a lot of strength with that brand really taking off in the U.S. So it's still very small here. They have under 70 stores in the U.S. and most apparel brands have over 200. So that's one that's faring well. And then of course in the value segment, and obviously Old Navy touches that, but off-price, we see strength in off-price because here you have the brands that consumers want, and it's pretty prevalent across all the companies, TJX, Ross stores, and Burlington stores. Now on the department store side, we just had Dillard's numbers out for the third quarter last week, and their third quarter comp sales rose 3%. That's a really nice figure there, and their margins came in better than expected. And that's because they execute a full price model. They're not promotional like Macy's or Kohl's at all. They do have clearance sales, and they're typically two times a year, but they're showing their models working. But we think that Macy's is showing some signs of improvement,
right,
that we could see their comp sales also come in higher when they go to report in early December. But Kohl's, they're still struggling. They, they still need to get assortments right. We did notice their online traffic was better than in store. And then of course, when they reported their second quarter, they were still seeing lower sales for their credit card customers. And those are supposed to be their most loyal customers.
So Mary, I got to ask you about Abercrombie & Fitch, because you did not mention that stock, that company at all. And that was like the star retail performer in 2023 when its stock jumped almost 300%. In 2024, it gained about 70%. So far this year, it's down about 54%. What is Abercrombie not getting right, or did it just peak already and now everyone else is playing catch up?
We're just not seeing the strength in the namesake brand, but in their Hollister brand, we are seeing strength. So really their Gen Z focus with Hollister, we're seeing strength, and we're thinking they're going to report some strong numbers for the third quarter. But the namesake brand, maybe it's become a lot more competitive. That customer that shops at Abercrombie also shops at Aritzia. So they could be getting more competition, and with some of the department stores like a Macy's bringing in more relevant brands, that might also be taking share. So we're just not seeing the strength that we had been seeing on a comp sales basis. And then also we'll have to see how they're faring with margins, because they did have a fair amount of exposure with India, and India is now at 50%, but we think they'll be able to shift sourcing into those lower cost Asian countries. Most of Asia is kind of near that 20% range now, including China. So we think most of these brands are doing a good job shifting sourcing, and we think that tariffs can be overcome. And we think in the second half, you will see margins improve across the board, but there are certain retailers that are not really experiencing the erosion, such as Ralph Lauren. They're really doing a great job generating strong sales at higher price points. And then, so they're getting the benefit of the sales leverage, and then also the full price selling
Yeah.
and at higher price points, and those are offsetting tariffs. So you're just not
Right.
seeing a negative effect.
Right.
It's just you're not seeing the margin expansion you would typically see with Ralph Lauren.
Mary, thank you so much. Mary Ross Gilbert, Bloomberg Intelligence Senior Equity Analyst who covers retail on the 2026 outlook for apparel, and of course, before the crucial holiday shopping season.